This Real Agriculture podcast is brought to you by Genesis Fertilizers. Nitrogen fertilizer is your farm's #1 expense. Farmers are working together through Genesis Fertilizers to solve the problem of high prices and security of supply by planting a state-of-the-art nitrogen plant. Security and earnings through ownership is the solution. Visit Genesis today at genesisfertilizers.com to learn more.
Sean Haney here with Real Ag Radio, Rural Radio 147, Sirius XM, and RealAgriculture.com. It's now time for talking about the markets. And of course, on Wednesdays, we do this on a regular basis for Real Ag Markets. And our guest today, this week, is Jonathon Driedger. He's a commodity analyst with Leftfield Commodity Research, based out of Winnipeg, Manitoba. And he's got a big smile on his face because the Jets are doing amazing. So
the Jets are doing amazing.
If only the market could do as well as the Jets, John.
Yeah, and the Jets are overcoming some adversity, some injuries, terrible special teams, and they're still winning. And it feels like it's just kind of, it feels like the markets are acting a little more like maybe the Ottawa Senators or Columbus or something like that, unfortunately. So underperforming expectations.
Yeah, no kidding. Well, I guess where I want to start today is talking about some of the acre expectations for 2024 on the Western Canadian prairies. We know that the dry bias continues to overlay the market conditions in Western Canada on the prairies. We finally feel like we've got some winter. And when I say finally, it's sort of like, hey, now it feels a little bit more normal as we see some of the temperatures. Will it bring huge amounts of snow? We're going to need a lot more than what people have gotten so far for the most part. As you look at kind of the breakdown of all the different crops for the 24 season, acre thoughts, are there some surprises in store for us given what the market's doing right now and what some of the conditions are?
Yeah, I don't know if, at least in terms of our early expectations, Sean, I'm not sure if surprises is necessarily the right word, and I'll maybe back it up half a step. And I think one of the things as we think about acres, and it's maybe even more, well, I would say for farmers in general, is like they tend to not swing as much as, let's call it maybe market sentiment or prices or those sorts of things would dictate that they might. And I think that's just, for agronomic reasons. I think there's other factors that all go into why a farmer puts something in the ground, and prices is just one of them, and it's an important one, but it is just one. And so, as we kind of do our analysis and our work on this, there tends to be sometimes smaller swings than one might think when you look at, the price of this is going down or that's going up or that sort of thing. There's just simply limitations that cap those a little bit. But, as we did some work, and so, we did some work on it, let's call it mid-December. And so, some of the trends I would say is maybe not all that surprising in terms of, I think we're going to see canola down a little bit. Maybe 3% 4%, maybe give or take. So we were just over 22 million last year. We think we'll be about 21 and a half. Spring wheat, maybe down a shade, but that's from a very, very high number. Durum is going to maybe be up a little bit and probably big acres, but, pulse is up a little bit. And so as you sort of go down, I guess, kind of as we go down some of the crops, as we weed through it, I would say not necessarily surprising in the context of, just the price activity that we've seen and so forth, maybe more what you might kind of expect. And then the other part, and you mentioned about, some of the dryness here in Western Canada, that kind of layers in that is that some of the markets that are performing relatively well, and let's just say pulses and durum, for example, are in those areas that or crops that are typically growing in some of those driest areas that have persistently had some drought. And so you look at something like canola that maybe bleeds some acres, it's probably going to be more so in those areas, because, A, those crops are doing well, and B, it's those crops tend to do a little better, maybe relatively speaking, when it's drier. So you line some of those things up, and that's at least some of the very early leanings we have at this stage of the game anyway. So
interesting. So I just had a thought, John, as we're talking about this, and I think you're right. We when we talk about the acre breakdown in Western Canada, sometimes we tend to put it in the same context as, say, the U.S. corn soybean acre discussion, which can very much provide some surprises to the market. Last year's a really good example of what can happen on certain acreage reports. Are the acres a little bit more inelastic than some of the other markets in from a Western Canadian perspective? Like, do we are there less changes no matter which direction the market kind of
Mm,
goes? Like I'm not concluding that. I'm just kind of curious.
yeah. I think one of the things that's maybe a little unique about Western Canada is I think we just have a more diverse, well, I don't know, maybe it's not fair to say more diverse crop mix. It's a little bit like saying the entire US is like Iowa, which obviously it's not. But
Yeah.
when we think about Western Canada specifically, I mean, so canola is the biggest crop, spring wheat, of course, but there's a lot of farms that grow, three or four crops on their farms. And so it is a diverse crop mix in Western Canada. And so in some sense, and again, you think in the US, corn, wheat, beans, and again, that's a bit, stereotypical and oversimplified and so forth. But I think because we do have this diverse crop mix and some of these areas are just so very, very different, so a sizable chunk of Western Canadian growing area is, say, for example, southern Saskatchewan and southern Alberta that tends to be drier. I mean, what happens there looks, an awful lot different than, say, in the Peace region of Alberta, which is a hugely important growing region, or northeast Saskatchewan, or that sort of thing. So I think in some ways, I think if you look at Western Canada, I mean, you really do have to. It's not generic, it's pretty diverse, and some of those areas have very diverse crop mixes, and so I think in that sense, and again, maybe we live in our own, backyarditis a little bit when we think about primarily on Western Canadian crop markets, but it certainly seems like it is a diverse crop mix. There's a reason we cover 14 or 15 different crops here. As part of our weekly work, and some of them are relatively small, but they're really important maybe in that region. So it's I'd say that's where maybe it is a little different in some ways.
And it would make sense that if the dry bias continues between now and say April 1st, canola would be the one that would probably have the biggest potential to be more to the downside. Like, the drier it is, the more likely somebody is probably to plant durum or even to plant
Mhm.
spring wheat, no matter what those market conditions are. Or I don't think people would jump to chem fallow. And in some areas it's dry, but it's not like that dry. There some areas notwithstanding. Um, but canola would be the one maybe that we would see more potential to go lower?
Yeah, I think possibly. So, for example, we came up with about 21.5 million acres in mid-December, and of course, the canola market has lost quite a bit of value since then. And again, we're reluctant to just flop around with every little ebb and flow in the market. Oh, guys are planting all this or not planting any of this. But I think the sentiment, I guess I would say, is that canola is vulnerable to maybe bleeding some acres around the margins. I mean, a lot of these decisions are probably already more or less etched in stone on a lot of farms. But kind of to speak to your point, Sean, like if it's dry, canola is not a cheap crop to grow. It's relatively expensive. If prices have been coming down, I think there's just a real negative sentiment around the crop right now. One could argue that's too pessimistic, but either way, certainly values have been bleeding lower. And, so, okay, it's a little expensive, a little negative sentiment, maybe got a little more unpriced in the bin than you feel good about today. Now you have a little bit of extra, let's say, risk on the production side. It's a little dry, might that draw in a few more acres of call it durum or, maybe barley or peas or something like that? I think that's plausible, So as we get towards spring, let's just say if the conditions are similar-ish to what we're looking at today, trending in that direction, I wouldn't be surprised if we look back and said our canola number is a little high where it is today. Now that's where we sit today. Of course, we got a few months where things can change. But I think, yeah, to speak to your point, Sean, I think that's a crop that is vulnerable to maybe losing a little area between now and spring.
Well, to give you an idea on the bleeding, for example, I'm pulling up some data from bar chart, and if you look at the November 24 contract, okay, so this is 24 new crop. The average price in the last 5 years on the November contract is 712. Okay, we're sitting at 633. So we're below the 5 year average. Now, hey, listen, like we were, it sort of tells you where we were compared to where we are
Mhm.
today, maybe a little bit. But yeah, we've I think bleeding is probably a good way to put it.
Yeah, and I mean there is an element of that for all crops as well, right? And these things are all relative. You look, for example, where, say, Minneapolis futures would be, based on a 5-year average or some others. I mean, everything is sort of now drifting below, maybe into that next range of prices. But having said all that, it's true. It's canola prices, they're historically high if you want to look, say, pre-2020. But certainly they're trading at the lowest level in several years. And might that stabilize and turn higher again? One might make a case that that's possible, but at the end of the day, it's a market that's soft, not the cheapest crop to grow from a risk reward perspective. Again, whether that is a right or wrong way to look at it from a farmer's perspective, every business is different. But it's not hard to kind of follow that train of logic and say, yeah, maybe around the margins, maybe some of that canola doesn't get in. And again, I don't think it'll be a huge collapse. I mean, it's a staple. It's a crop that's done well for farmers for a really long time. I don't think we've been anticipating just a collapse of canola acres or anything
Yeah.
like that. I think that's far too dramatic.
Okay,
But
so
from a production,
and some people are going to say, okay, go ahead.
I was just going to say, as you extrapolate that, Sean, you maybe bleed a few acres and it's a little dry and you maybe yield is a little disappointing again. It's not hard to then see a couple dominoes fall where actually that crop gets quite short next year. And again, that's a couple ifs that are built into that.
Yeah.
But you could see where potentially, by the time next harvest rolls around, it's like, geez, that's a bit of a small crop. We lost some acres, yields are a bit soft. Who knows? But that's possible, right?
John just inserts the contrarian play right there. I like it. That's good stuff.
Yeah, don't construe that to a raging bullish outlook. It's just a range of possibilities, right? It's possibilities.
Honestly, man, this is exactly what the grower's going through right now in terms of, because I think there is a certain percentage where there is some flex acres. It may not be half the rotation. It isn't probably half the rotation, but there is some flex there. And leading up to the spring, how people look at what happens, from the moisture standpoint and which way they think the market's going to be going. It's gonna be a factor. What's interesting, if you look at soybeans in November, they've kind of rolled over the same way that canola has. So it's not just a canola issue. It's kind of an overall veg oil complex thing that's happening right now.
Yeah, no, I totally agree, Sean. And as we think specifically, say, about canola, and you sort of build this case, maybe that crop possibly ends up a little short next fall. I mean, that's only one piece of the story. And to kind of speak to your point about soybeans, which is obviously enormously important for canola values, so I think smaller Brazilian crop probably largely baked into the market, although I guess we'll see. Chinese demand, is that a little bit vulnerable? One might argue that, although you never know exactly what's going to happen in China. That's always a bit of a mystery. If U.S. acres are a little bit higher next year, and again, maybe it's dry in the U.S. as well, for all we know. But it's not hard to see where maybe canola still looks relatively tight for say 24, 25, and yet dynamics around it, just kind of keep a lid on that price because maybe the external factors are a little bearish, and even just demand in general. I mean, commodity markets in general, something like crude oil is kind of it's a pretty soft market despite a tremendous amount of unrest in this critical area in the Middle East. You'd think at least there'd be some risk premium or something built in, and everything on paper, crude oil should be tight, and yet it's just trading soft. Maybe there's some broader economic issues that are spilling into commodity markets that grains aren't immune to. So I think all these dynamics, work into probably why we're just a little soft in grain markets in general, which is kind of getting beyond the specifics of acres for new crop per se, but you think about the things that are probably rolling around in growers' minds as they maybe wrestle with some of those flex acres, whatever portion of that farm there is.
Yeah, well, you look at soybeans on the November contract, for example, we clear in the last year, the market clearly feels that 13 is kind of a lid on the market, and we're trying to establish whether where we are today at 12 is kind of where we're comfortable from a bottom standpoint, as we try to, we're kind of in this sideways sort of channel. But we got to remember as well that, in the last year, we have been down as low as like 11.25 or 11.30. So that's another 70 cents from where we are today. So we're kind of testing that sideways channel right now.
Yeah, and certainly, and of course, Friday's report is a big wild card with USDA. I mean, it is one of the more significant reports in the year, and sets the tone for maybe the next several weeks or month or more of trading, potentially, depending how the numbers come out. I mean, sometimes they come out as everyone expects, and it's a big nothing. But if we get a bit of a negative some negative numbers, the way momentum is trending. I mean, it wouldn't, would it be shocking for us to break through support and test the lower end of that bounds? That's, it all just feels a little soft right now. There's a lot of negative sentiment. And again, things I always feel the most negative at the bottom. And so, want to be a little cautious about sort of just hopping on that bandwagon per se. But certainly the overall tone is soft. This market is looking for a trigger to try and, kind of find some stability and turn higher. And there's just not a whole lot there to sink your teeth into.